What's up, you guys? So Webb here from OneGlanceTrader.com, and in this video I've got a brand new indicator release called the Guppy Multiple Moving Average Indicator exclusively for TradingView. And what we're going to go through in this video is what the GMMA indicator is, how it works, and more importantly, how to trade with this indicator. So if you're a big fan of Daryl Guppy's work or trend trading or pullbacks and trends, this indicator in this video is for you. All I ask for in return is that you smash that like button and don't forget to subscribe and hit that bell notification. And if you want to create your own indicators for TradingView just like this one, you can click the link down below which has the Fiverr coder that I personally use to create the Pine script codes for TradingView. He's very good. Just mention the YouTube channel OGT and he will sort you out with the great discount. So make sure you check that link down below. So as I said, the GMMA indicator was created by Daryl Guppy, one of the gurus in terms of trading, forex and commodities and technical analysis. And he came up with this concept which utilizes a group of moving averages to distinguish short-term traders and long-term traders. Now, I'm not going to go into the kind of theory. I've got a video on that which I'll post in the top right corner and in the link below, which goes through from the man himself walking through how this indicator works and how's the best way to kind of use it and the theory behind it. But at a very high level, you've got a group of fast moving averages which are classified as short term investors, and then you have a group of longer term moving averages which are considered long term investors. And what this indicator tries to do is, instead of showing multiple lines on the chart, it to group the short term and the long term, it utilizes bands, which signifies the group of those moving averages, and it gives you, in my personal opinion, a more cleaner and visual view of the charts than having 8, 9 moving averages on your chart as well. So what we've got here is we've got the Euro USD daily chart, but I'm just going to take a step back actually. Is let me show you guys how to get it. So if you go to the indicator section and you type in OGT, you'll see here in the public library it's called the OGT GMMA indicator. And you guys can check out all my other videos and tutorials on all the other TradingView indicators that I've also created as well. Again, all of them are absolutely free. So click on that and then it will load over here. And what we've got here is, like I said, the Euro USD daily chart, and you can see here we've got a variety of colors, and what these colors do is distinguish whether or not we are in a trend or we are ranging, and the different variants of the versus light green and dark green and light red and dark red is either the short term or the long term investors. So what I've done is I've taken a snippet of this chart. It's just easier to kind of explain it. So we have got light green and we've got light red. Whenever you see light green or light red, that means that the short-term investors or the fast-moving averages are aligned and going in the direction of the trend. So the short-term traders are what we're calling is bullish, and here the short-term traders are bearish. Now, if you see in the short term, if you see a yellow, as you can see here, it might not be that clear on the screen, but I'm just trying to circle a few pieces of yellow. That is where the short-term traders are neutral. So we're not either bearish or we are bullish. So that's how the short-term group kind of interacts with one another. If I change this to blue, so then you've also got dark green and you've got dark red. So the dark green is where the long-term traders are bullish, and the dark green is where the long-term traders are bearish. And then you'll also see these blues over here. If you can see here, that is when the long-term traders are neutral. Now, as you can see here, what you're really looking for is when you've got light green and dark red together, or dark red and light red together. As you can see over here at the current price action of this week's daily close, you can see we've got dark red and we've got light red. So the short-term investors are bearish and the longer-term investors are also bearish. So this trend is signifying from a technical perspective that it's a very strong trend over here. And if you are a swing trader or a long-term investor or a long-term bearish on the Euro USD, you could place a sell order in at the or a limit order on the Euro USD to short the market, and you will then continue to just ride that wave, because you can see here for a long time now, um, over here, that the long-term investors or the long-term moving averages have been dark red and therefore bearish. So very quickly you can analyze a pair on any time frame, or even a stock or a commodity. It works exactly the same way to realize that a stock in this case is currently bearish. Now, the way I like to use this indicator is to understand where there could be a change in trend or a pullback inside the trend. So let me just try to get most of this stuff out the way. Perfect. Let's go back to over here. So a good example of this, I'm just trying to find out, would be this section over here. So we can see that we both had the short term and the long-term investors all in green. Price went up, price came back down, and again I've just put so much stuff on it, and then price went down, and you saw the short-term investors went to yellow, therefore that they went to neutral ground. And then we saw it change to green again, and when it changed to green was a perfect entry point at this level over here to continue to ride that wave and to potentially take profits again at that level, or that level, and even potentially at this level here where it's gone red. So what you're looking for is the longer term to be dark red or dark green, and then you're looking for the short-term traders to go into yellow or red territory, and then if it comes out of that and goes back to light green again, that is where you want to do it. So you've got your trend over here. You want it to go down and then go back up, and then around this area here is where you would see kind of this yellow situation or red situation turn back into green to go take that space. Another perfect example is this area over here. You could see within this block of price action, both moving averages were red, then it turned into yellow and green, then turned red again, and then you got a move, and then this again is another scenario here. And throughout all of that price action, the long-term traders continue to say red, so therefore signifying that this could potentially be a very strong trend. And so even price gets into the dark red, but again there is no movement in that dark red, including points over here, over here. Another way, again, like you could use this indicator is when price gets into the dark red, dark green zone or the dark red zone, and you're still seeing strong trends because the dark green does not change. This example over here is a trend change. This example over here is a trend change where price there has gone from green to blue to red, and then back to green, and then back to red again. So hopefully you can see now how you can quickly see what is the current state of the market, where the short-term pullbacks potentially are, but then also where the long-term kind of trend reversals coming in there. So if you could use this with divergence. And I'm not going to put it up on the chart. Here, price could be making higher highs, your oscillator could be making lower lows, and then you see the turn, or you see the turn here will give you the signal. Then it's time to go there. You could see, you know, missed weekly pivots here, here, and then there, and then you could see divergence with the red showing. That's your entry signal to potentially hit that missed pivot level. There's so many ways you can use this indicator while using other technical factors to get to stack the odds inside your favor to get a profitable outcome. And what I like about this, if I go back to here, is you can use this on any time frame, because again, it will just take the moving averages. Let's just say we're looking at a 15-minute chart. Um, let's have a look at some nice ones over here. You've got this area here. Oh, I'm trying to take a snippet of it. You got that area over here as potential entries. This again would have been an entry, but then is a doesn't work out because price can't break through this level, and then you've got this kind of chop. This is an example of where the indicator is not that great, right? Because when it is going through consolidation, then you get this information here, which is why I like to use mispivots. Whenever there's a mispivot, 99.9% of the time, you'll probably have a scenario like this, because the mispivot for the day was probably here, right? And then you eventually see, I made that up, but you know, you kind of get what I mean. Then price goes in. So your entry trying to get into a mispivot trade would be around here, around this blue area here, because the long-term investors are going there. Try to get a one-to-one reward to risk to go and make that trade. Again, trading doesn't need to be that complicated, and hopefully you can see how you can use this indicator to give you a more visual view. You can have this on MT4, MT5. It's just a set of moving averages. Again, I'll link those moving averages down below so you can kind of build this in MT4. Make sure you check out the video that goes into a lot more detail than I have, but this is how you can use it. More visual, more pictorial way of kind of utilizing the Guppy's multiple moving average indicator. So I've put that video on the screen now to learn about more, and then check out my playlist as well for my other indicators for TradingView. So really hope you've enjoyed this video, and I shall catch you guys in the next one.